Logan, Danny,
And thanks for having me.
Jared. Welcome to this Q4 wrap up of what we're seeing on the east and west side of Manhattan. And I want to start off with a question that all of you I know are getting a lot right now, which is okay, the vaccine has been released or produced at least, and what impact will this have on the market going forward? So, Danny, just to start off with you, is this is this a false hope, or should owners who are thinking about selling, should they wait until the vaccine comes out because it's going to have a significant impact on pricing?
I think it's obviously a good thing that the vaccine's coming out and being rolled out, and we should be in a pretty good place by spring of next year. I think that's good just for the world and
Yeah.
good for real estate. I think in the short term, Peter, it could be a little bit of a false hope because if you speak to investors who've been in the market for a while, investors who know New York City, they'll tell you, hey, values and rents have rolled back to where they were close to 2010 levels. They've gone back 10 years. Now it's not just going to change overnight. We're not going to reabsorb all these vacancies, not to mention vacancies. If you speak to people who've owned in the city for a while, the vacancy rate's higher than it was in 2008 and 2009. So I think there's a little bit of a disconnect in terms of sellers saying, hey, things are going to go right back to normal pre-COVID once the vaccine comes out. And buyers saying, no, it's going to take years. Could be 2 years, could be 3 years, but it's going to take some time.
Yeah. Well, I think that first of all, it's a great point, and the whole scientific community gets applause for being able to develop something that people in June were saying was going to take 2 years minimum, and they got it out really, start to finish within 9 months, which is amazing. I'm glad you brought that up. But so so your point is that this isn't like the vaccine comes out and then a month later the market pops out and everything's back to normal. Right. And Logan, thinking about this, you had a request from different buyers of buildings that were touring where they were looking for historical data. Can you tell that story a little bit? And I think that'll shed some light into not only how buyers are thinking about the market right now, but also kind of what the general mindset is.
Yeah, and I've toured quite a few people recently who have been asking for data from previous, recessions almost, whether it was 2016 when the market went a little stagnant, 2008, 2009. People are looking at the cyclical trends and they're trying to match up where we are today with, historically what it may have looked like, the struggles previously. And I think that's where a lot of buyers' minds are at, because yes, this vaccine did just come out, which is great news for everybody. But then it's a matter of distribution, who's going to actually take it, who's going to be comfortable going out in the real world. And I think that, it's going to take a little bit before people are actually comfortable just to keep going back to normal, when they've seen historically, how long it took to get back up to the levels they were previously at.
Right. And also just from a pricing standpoint, I think if buyers are asking for historical data, for example, going back to the 2008, 2010 recession, that if we're looking to peg prices and rents back to that time period, I would generally view that as although the fact that the market's retreated so far is a negative thing, but that buyers are now pegging to that and saying, that would indicate to me that to use kind of a blunt phrase, they're trying to call the bottom by saying, look, we've just rolled back prices 10 to 12 years. Therefore, maybe we haven't picked the exact right time to buy in, but this is the time we should start looking at the market seriously. The other thing that points to, and I think where the vaccination question comes from, Jared, from sellers, that is all that, okay, the vaccine will come out and then operations will improve. Talk to us a little bit about how you're seeing operations on the east and west side of Manhattan. We're sitting here in the back half of Q4. have you seen any real meaningful changes over the last 90 to 120 days?
Yeah, Logan sort of touched on it. It's with the vaccine, yes, the vaccine is coming, but this is about getting people back into the office and getting back into New York City and getting the restaurants open and getting all the things that attract everyone to New York City back open. I've spoken with actually a handful of clients that said I can't even rent my units at a number that I never imagined they would rent for, similar to 2009, 2010. So,
So
spoke
from,
with,
sorry,
yeah, go ahead.
So I'll interrupt you here. So from an operational standpoint, what is the state that you're still seeing rent rolls exist in? Obviously, it was well reported that, that vacancies were on the rise, rents had come down. Are you still seeing that persist?
Yeah. Vacancy is still, we're talking about, we were sitting here 90 days ago. I would say vacancy is probably higher. Rents have gone down. Like I said, I spoke with an owner who said, I'm not even going to try to rent my units because I can't. And, I can try to give them away, but that's not even working. So,
well, that owner's position was, I'm just going to just take a pause over the next couple of months and
yes.
then bring them out, kind of middle, late spring, right?
Yes. Hopefully everything clears up. The weather's going to be a little bit nicer. You're going to be able to do more things in New York City, even if it's a little bit more open. But yeah, I'm putting everything on pause because it's just not working right now.
Mm-hmm.
Peter, one other thing I just like to add, and just in terms of values, real estate values, and really just kind of fundamental supply and demand. I've had several people tell me over the last week on the potential sellers saying, I'm going to wait, right, because of the vaccine. I'll just wait. It's going to come soon. This is all happening. We can see the light. But if every seller is thinking that, what's going to happen to the market come spring or come summer in terms of the amount of inventory online for sale? And there are buyers saying, and I heard this twice yesterday, I was walking a couple people through different buildings, that they're hungry to buy, but they're not seeing enough product out on the market available to buy. So there could be a real advantage, or any advantage, I'll put it this way, of waiting until the spring because of the vaccine might be offset by if you were to market your building in January or February when you don't have a lot of competition out there and you're not competing with a lot of other, buildings on the market.
Yeah, because as you said, there are buyers out there. They're looking at this historically. We're starting to see, whereas 6 months ago it was very hard for buyers to raise money. There were so many questions on the horizon. Some of those questions have been answered now. And so you're starting to see syndicators raise money again, which is kind of a leading indicator that the number of buyers will increase. And so you're saying if you're a seller and you wade forth into the scarcity, which is there's less product on the market, then you're going to be the one that's going to get all the attention.
Correct.
Yeah.
When I was talking to people, Peter, and they're like, I'm not going to sell until the Second Avenue subway comes out because I want that priced into my sale. And I'm saying the buyers have priced that in already.
Right.
So the hope that the sellers are getting from the vaccine, the buyers are reading the news. They know the vaccine's coming out. So they're pricing that in too, right? Yeah. So you're going to get a premium for that today. It's not like the buyers don't know about this.
Right.
It's like the equity markets, right? The price today is pricing in future performance. That's what's happening in New York City.
Right. The upside's being priced in from the buyers too. So.
Well, I think when you bring that up, the real question is, okay, the vaccine will come and it definitely will make the impact in 2020, 2021 in life. We all hope we'll start to return to, to completely normal. And for sure, the way it looks that if we're sitting here 12 months from now, it will be back to normal. But I think the bigger question that we all have, and, all of us in New York City has is, whatever the numbers are, whether it's 350 or 450,000 people. And Jared, you pointed out there were households or mailing addresses that left New York City. So the number could be higher. What is the snapback of that? When do they come back? How many come back? Do they all come back? Do half come back? Whatever number come back, how long does it take? Does it happen over 12 months? Does it happen over 2 years? And maybe do some never come back, but they're replaced. I think in other conversations that I've had on the podcast, and then also just with other participants in the market, is that they think that the lower rents and the lower occupancies are going to usher in an opportunity for new people to enter the market, to live in New York that maybe never had an opportunity to. And if you combine that with some of the cultural stuff, some of the business opportunities that are created in times like these, that it could be actually be a long term a very good recipe for just the overall life of the city. In general, Logan, when you think about operations over the last 90 days, have we seen much of a change in terms of just general operations and cash flows, or has it basically been the same?
I think it's generally, from the last time we spoke a few months ago, I think it's generally been the same. It's obviously your bottom line has gone thinner. Expenses have gone up, taxes have gone up, rents have gone dramatically down. I think that a lot of people are trying to consolidate their operations, try to kind of cut the fat off, to say. So I haven't seen a major shift in actual day-to-day operations, other than, businesses can't really go in the office and work together and kind of plan. So maybe it's stalled things a little bit, but people have done a pretty good job, I think, adapting to kind of the mobile world of running business.
Mm-hmm. Jared, who would you say would be the who are the sellers today?
Yeah. Funny, I spoke with a guy yesterday who's 90 years old, and he called me and he said, I need you to recommend me a couple management companies, because there's stuff on the operation side with the city that I just can't do over the computer, and I don't know how to do it. So it's funny that Logan brings that up. I would say the sellers are on the same type of people that were 90 days ago. People who cannot keep up with what's happening on the New York City management side. People who say, if my boiler goes out, I can't afford it, especially now with my bottom line that it's way down. Speaking with a woman who has a bunch of retail vacancy, and her rents are really low upstairs, and she's in trouble. So when the tax bill comes in a couple weeks, she's going to have to think long and hard about what she needs to do. So sellers, still people that, single asset owners, a couple buildings who don't have a large operation, who aren't operating with scale, and who have really taken a hit from, not only what happened in 2019, but what's happened with COVID.
Yeah. And where are they, Danny, where are they going? So I think the last time we looked at it, since March, the team has either closed or put under contract almost 40 buildings. It's like, it's about 38 or 39 buildings. So that, although in a normalized year, that number would be 80 or 90, that's still, it's a large number of transactions for us to have completed this year in the middle of all the chaos. Where in general are you finding that people are going? So the sellers, what are they doing with the money?
Some are just cashing out, and I'm not sure exactly where they're putting their money, but they're paying their capital gains tax and they're just cashing out. Maybe they'll put it in the stock market. Others are selling and buying out of state. That's a trend that we really saw begin probably, I'd say, when the rent laws passed in June 2019, and people got a little scared by the future of New York City. And that could be anywhere from the Carolinas down to Florida, all the way to Texas, kind of Sunbelt area. But really, more business-friendly states. I spoke to somebody this morning who said, please introduce me to one of your brokers down in Fort Lauderdale, Miami area. I was thinking about buying in California, but I'm going to deal with the same stuff I'm dealing with in New York. I want to stay in multifamily, so I want to go to a state where there's no rent control. That was the theme of it. So out of state, but for the most part, I'd say the majority are not staying in New York City, which is interesting.
Yeah. Logan, looking ahead to 2021, the first quarter of 2021, Where is the opportunity?
I think that, I think the window to buy is going to be shorter than a lot of people think. I think that with the optimism of, the vaccine, the election, whatever, it's causing this kind of false sense that, it's going to be fantastic. And I think that alone will create, a sense of urgency for the short term. But again, I think that it's going to be finding these deals or these properties for sale where, you know, they've been owned by the same family for 50 years. The seller's ready to go. They're not willing to hold on anymore, coming out of pocket to cover these expenses essentially. And I think that, identifying those types of owners, the real sellers in the market, are going to be where good opportunities happen.
Is this almost a time where if you own in a neighborhood, you should be expanding your footprint?
Absolutely. We have a building under contract right now on West 22nd Street. That's a perfect example of where, local owner owns 3 to 4 buildings nearby, typically not a buyer in the market or getting aggressive right now, but seeing, hey, I can pick up another piece near my other properties at a significantly lower basis than I could have a year ago or 2 years ago. I'm going to hold this thing for the next 10 to 15 years and just kind of operate at, economies of scale with my other properties. That's a big buyer in the market right now.
Right. I always get questions about the foreign buyers and the foreign influence in New York City. Jared, and then I want you to answer this question. How are you seeing foreign capital enter the market right now and look at today as an opportunity?
Sure. There's always foreign capital that's floating around New York City. Some years it's more than others. I would say, look at a couple of deals that just happened downtown, especially on the west side. 2 foreign buyers closed on a building on the same street within the same week, 2 different foreign buyers.
Mm-hmm.
I just got an offer on a building from our highest offer to date from a foreign buyer who is local in New York City, but raises money from outside of the US.
Mm-hmm.
So it's here. I think I haven't seen it, pick up dramatically, but it's hanging around.
But look, there are so few transactions today to even see
Sure.
any transactions with foreign capital is significant. And the foreign capital that you're referencing, right? It's all private, high net worth foreign money, right?
Correct.
It's you're not seeing
Correct.
institutional foreign institutions come in. It's high net worth, and what do you think are the drivers of that?
Opportunity. They see what's happening in New York City. They see that rents are down, 30, 10, 20, 30, 40%. And, the financing, talk about what's different 90 days ago, financing is much more available on a lot of these deals. So that's a huge driver. Yes, if you have a retail component, much different, but there's some real opportunity right now.
Yeah, that's definitely a part of the market that's transitioned over the past 3 to 4 months is that financing. Really banks have gotten their stuff together in terms of getting comfortable on what their underwriting parameters are, and the rates are still very low. So that's good. Danny, as we end off, how are you noticing foreign capital come into the market?
Yeah, I've noticed that foreign capital has stayed pretty steady. Which I think is actually telling because a lot of, we talk about the syndication money that although that's starting to come back as of late, that really dropped off for a while. The private equity guys, the syndicators, private capital. So it's private foreign capital, could be Japanese, could be Chinese, could be European. It's a mix. But I think that they still, some countries, depending on where the money's coming from, might have certain tax advantages based on what they buy here in the US. But I think it's still just the belief that, it's New York City, it's the United States, it's a good place to park your money for the long term. It's a safe place. It's a safe place. So, and they believe that, New York City is going to come back. So they're not too, they're not overly cautious about it.
Yeah. Well, one thing that I notice that's different between foreign buyers and, just foreign capitals, foreign high net worth individuals versus their American counterparts, and I realize this is a generalization, but the time lens by which they look through investing is much longer. So they just have they just look at things from a much longer time horizon, whereas other investors, obviously everyone's just trying to get a return as quickly as you can, but I think that gives them more license to capitalize on markets such as the one we have right now, where even if it went down a little bit further over a long period, you end up doing pretty well. One of the things that I think is interesting right now also is that when you look at the number of entrepreneurs starting new businesses, that number had been coming down in the United States for several years. And all of a sudden in about June, that number took a big change, and the number of people starting new businesses started to rise dramatically. So, that really points to American industrialization, or that maybe that's not the right word, but American growth and entrepreneurialism and starting businesses and all that kind of stuff, which is good for all the things that real estate owners need. So Logan, Danny, Jared, thanks very much for coming on this Q4 wrap up of the east and west sides of Manhattan.